You hear record-breaking sales, and you probably think everything's going great, right? Well, with Tesla's latest earnings report, it's not quite that simple. They're selling more cars than ever, but their profits are falling, and some investors are getting worried. Today, we're going to unpack that paradox because the answer reveals a really high-stakes bet on the future of the entire company. So this is the big question, isn't it? How can a company be breaking sales records, but at the same time see its profits and its stock take a hit? It's the puzzle that has Wall Street talking, and to solve it, we've got to dive deep into the numbers. Okay, so first up, the big, flashy number. In just 3 months, Tesla delivered almost 500,000 cars. That is a brand new record for them. I mean, a massive achievement that shows people all over the world still really, really want their cars. But, and this is a huge but, here's the twist. While all those cars were flying out the door, their net income, their actual profit, dropped by a staggering 37%. So they sold more, but they made way less money. This is the heart of the paradox we need to understand. So before we get into the drama, let's talk about the good stuff. Because on the surface, this was an absolutely blockbuster quarter for sales growth. And check this out, it wasn't just about the cars. Total revenue jumped up 12% to over $28 billion. And their energy storage business, wow, it is just exploding, with deployments up a massive 81%. These are some serious powerhouse numbers right here. Now, this kind of growth didn't just happen by magic. It was all part of a very clear strategy. Launch new models and new updates to bring in a whole new range of customers, especially in those key markets around the world. A perfect example is what they did in China with this new Model YL. It's basically a longer version of the Model Y, and it has a third row of seats. They're going right after the family market and trying to fight off some really intense competition from the local Chinese EV makers. And they weren't just thinking about families either. They also rolled out these new super fast Model Y performance versions over in the US and Europe to keep the car enthusiasts excited. So the strategy was clear: more options for more people. And it worked. It led to those record sales. But that success came with a pretty big price tag. All right, so here's where the story takes a turn. While those record sales were grabbing all the headlines, savvy investors were looking at something else: the hidden costs behind all that growth. Okay, to really get what's going on, we have to talk about something called operating margin. I know, it sounds a little jargony, but stick with me, it's actually pretty simple. All it is the percentage of profit a company makes for every dollar of stuff it sells. And for a company like Tesla, which spends billions on new factories and research, having a healthy margin is absolutely crucial. And this is the number that has everyone so worried. Just 1 year ago, Tesla's operating margin was a really healthy 10.8%. Fast forward to today, and it's been chopped almost in half, plummeting to just 5.8%. This is the big red flag that really spooked the market. This analysis from IND Money really hits the nail on the head. They basically said, look, Tesla made a strategic choice here. They cut prices to protect their spot at the top of the EV mountain. But the fallout from that was a profit squeeze down to a 5-year low. So what happened? How did things get so tight? Well, it was kind of a perfect storm. The number one reason was those aggressive price cuts to stay competitive. But it wasn't just that. They also got hit with over $400 million in tariffs, their day-to-day costs went up, and they made less money from selling regulatory credits. All of that just chipped away at their bottom line. So you're probably wondering, what's Tesla's plan? How do they fix this? Well, their answer is interesting. They aren't really focused on fixing today's problem. Instead, they're doubling down and betting everything on tomorrow. And they're not even hiding it. In their own shareholder update, they basically told investors, hey, we know car profits are tight right now, but hang on. The real money, the long-term play, isn't just selling the car. It's all the AI, the software, and the services we're going to build on top of it. Right now, when you think of Tesla, you think of this, right? These gigantic gigafactories just pumping out cars. Their whole world revolves around making and selling physical things at a crazy, unbelievable scale. But this is where their head is at. This is the future they're pouring all that money into. We're talking about projects like the Optimus robot and the insane AI you'd need for a fleet of Robotaxis. It's like they're trying to become an AI and robotics company that just happens to sell cars on the side. And listen, this isn't just some science fiction daydream. They've laid out a real, concrete roadmap. By 2026, they want to be mass-producing the Cybercab, the Tesla Semi, and their new Megapack batteries. And here's the kicker. They plan to have the first production lines for the Optimus robot up and running. That is the high-profit future they're willing to sacrifice today's margins for. Okay, so let's zoom out. What does this all mean? This earnings report wasn't just about numbers from the last 3 months. It really pulls back the curtain on this huge strategic tug of war that's happening inside Tesla right now. It's almost like they're operating on two completely different timelines at the same time. You've got today Tesla, which is all about survival. They're in a knife fight for market share, cutting prices just to stay on top. But then you've got tomorrow Tesla, which is looking way, way down the road, pouring billions into AI and robotics, hoping for that massive payoff later. All right, so let's boil this all down. Here are the key things you need to remember. 1, sales and revenue are still growing like crazy. No problem there. 2, but profits are getting seriously squeezed because of those price cuts and rising costs. 3, the company's big plan is to pivot, to shift from just making cars to making money from AI and software. And what that all means is that the next year or so could be pretty rocky as they try to pull off this massive transition. Which brings us to the final, billion-dollar question. Tesla's asking everyone, investors, customers, all of us, to ignore the short-term pain, to look past the shrinking car profits, and to believe in this wild future built on robots and artificial intelligence. But the real question is, will that future get here before the patience of today's market finally runs out?